The biggest shakeup to our mortgage rules in over a decade is here, and it could completely change the way you buy a home. Starting December 15th, first-time buyers can afford more home with less money down and even stretch their mortgages further. Sounds great, right? Well, not so fast. What if I told you that this change could actually make the housing market even less affordable for everyone else? In this video, I'm breaking down everything you need to know about these new rules, from how much money you'll actually need for a down payment to why this might heat up an already competitive markets like Toronto and Vancouver. Plus, stick around until the end because I'll explain exactly how these changes could impact your plans, whether you're buying your first home, upgrading, or even selling in 2025. My name is Sitzer from Team Sir Real Estate. I'm a local real estate agent here in the Greater Toronto area, and I help clients with buying, selling, leasing, investing, as well as all aspects of pre-construction condos. If this is your first time on this channel, please consider subscribing for all things real estate. So let's talk about what these changes are. Now, prior to this change, any house that cost more than $1 million was not eligible for mortgage loan insurance. Therefore, homes that were over $1 million required down payment equal to 20% of the purchase price of the home. Now, the government has now raised the price cap to $1.5 million, and buyers purchasing homes that cost less than $1.5 million qualify for an insured mortgage for up to 95% of the purchase price of their home. After December 15th, 2024, the down payment threshold will change. You can now qualify with as little as 5% down on the first $500,000 of the purchase price, which was already in effect. But now you can do 10% down on the remaining amount of up to $1,499,000. So let's look at an example. For a property that's priced at $1 million, the required down payment will drop from $200,000 down to $75,000. And for a property priced at $1.5 million, what used to require a down payment of $300,000 would now be $125,000. Now, there's a caveat to this, which is you actually have to qualify for this to make sure that you can actually borrow up to that amount with a little down payment. Now, this marks the first increase to the price cap since 2012 and is intended to better reflect current housing market realities. For instance, in Toronto, the average price of a house in 2012 was $497,000 in comparison, and the average price of a house in Toronto now is over $1.1 million. Now, the second change that's coming is the extension of the amortization period. Now, in Canada, mortgages typically have a 25-year mortgage amortization period. An amortization period is the number of years that it will take for you to pay off your mortgage, and a longer amortization period means that you'll have longer to pay off your home, and consequently, that your monthly payments will be lower. Now, back in August of 2024, the federal government announced that lenders could actually offer 30-year amortization periods for first-time buyers who have insured mortgages and are purchasing a new build or new construction home. But as of December 15th, this allowance will be expanded to include all first-time home buyers and all purchasers of new builds as well. Now, by allowing all purchasers of new built homes to qualify for a 30-year amortization period, this measure is also expected to incentivize new housing construction and address housing shortages. But that's a whole separate video on its own. Okay, so let's talk about market implications and what these changes actually mean for a buyer. Now, the first implication that this change is designed to impact is to increase buyer accessibility. Now, these changes are particularly impactful in markets like Toronto and Vancouver, where the average home prices exceed over $1 million. If you were previously looking to buy a home that was worth, or a condo, let's just say, that was worth $600,000 in the city of Toronto, not much will change for you. But if you were somebody that were looking to buy, let's just say, north of $1 million, now you have a little bit more leeway in how much money you need to put down. See, many buyers who previously couldn't meet the 20% down payment requirement now have the option to enter higher price segments of the market. Now, this could also increase a potential surge in demand. See, the new rules are expected to inject significant demand into the $1 million to $1.5 million market segment because it's now, the threshold is going from $1 million to $1.5. So it makes sense that it's going to increase demand in that $1 to $1.5 million segment. Buyers who previously saved, 10 to 15%, but couldn't reach the 20% can now participate in this market, especially for freehold properties. Now, here's what I feel the impact is going to have on housing prices. See, freehold properties, especially when you're looking at semi-detached or even certain detached properties in certain markets of Toronto in the $1.2 to $1.3 million range, are already highly sought after, especially for first-time buyers, because it's a great entry point for freehold. Now, the changes are likely to increase competition in this segment, potentially pushing prices up even further. Now, I personally feel that this added demand is going to put more added pressure into the existing supply issues, especially in urban markets with low inventory and high demand. Now, a very common trend is for a lot of condo buyers to move from condos to freehold homes, particularly townhouses and semi-detached. And with the lower down payment requirements, many condo owners who were previously unable to afford freehold homes may now qualify. However, I feel that this is going to create a much bigger gap between the condo and the freehold market, which already have a pretty wide gap in terms of price. And this is just going to add more pressure to that gap. Now, here are the concerns that I have with these new rules. Number one, it does not address housing supply issues. See, these measures are focused solely on increasing demand, which does nothing to address Canada's ongoing housing supply crisis. And based on the latest numbers, we're way behind on the projected $1.5 million home completions by 2030. And without additional housing supply, the influx of buyers that this new changes is going to bring could inflate prices even further, making affordability worse in the long term. The second concern that I have with this new legislation is that while the lower down payment does open up a lot of opportunities for buyers and potentially move-up buyers, the monthly payments on these high-priced homes is going to be an issue. For example, a $1.5 million home with a lower down payment still results in monthly payments of, based on today's rates, as high as $8,000 to $9,000 at current interest rates. So this could be potentially a risk for buyers who, although may have to put down a little bit less on down payment, but they'll struggle with the high carrying costs. Now, as always, I am curious to hear your thoughts on this new ruling that's taken effect on December 15th. Do you feel that these new mortgage rules is going to have a positive impact, or do you feel it's going to have a negative impact in the real estate market? Please let me know in the comments. And that is all for the video today. I hope you guys found some value. If you did, please go ahead and give it a like. And of course, if you're new, don't forget to subscribe. Thanks for watching. Take care.